Good evening, traders. Today is Friday, January 13th. Friday the 13th, not the best day in the world to deliver some bad news to the bears that the bear market is over. Today you're going to see conclusive evidence on the daily and weekly time frames with the MACD and hidden lines. For you newer viewers, you're probably wondering what in the world is he talking about hidden lines? Well, you existing viewers know what I'm talking about because you've been following this channel and following Twitter. Last Saturday, I posted a video 6 days ago. SPY is targeting 396 to 398. And that is going to be the site of the showdown. How'd we do with that prediction? This is Friday, about 30 minutes before close. The red line is 396. The green line is 398. Okay? And if that doesn't blow your mind yet, this morning, just after opening bell or so, I tweeted this out. I bet I know where it's going. 396.37, which is the 65-minute SMA 20 line. I'll call that right there the hidden line. You guys following me on Twitter, you know. How did that prediction turn out? We were stalling in this area for an hour to 2 hours. Let's go to the right. 396.40. It was right there. How did I know it was going there? There are lines, hidden lines. 396 to 398, hidden lines. The market makers don't want you to see. What the market makers want you to see are the trend lines, the traditional trend lines. You know, like everyone likes to draw for all of 2022, from April through August through October, the trend line, the 200 SIP moving average line. But that's not the line, in my opinion, the market makers are really tracking to. They are tracking to other lines. For example, yesterday, you guys are following me on Twitter, you guys know this answer already. There's a new channel line it was tracking to. This is the weekly expected move, 80% line that it found resistance on. This is SPY Futures weekly EMA 50. It smacked and got rejected on yesterday. And all the while, backtesting a couple times during the day, proving its strength. The 5-minute EMA 50, 5-minute EMA 50 successfully backtested a couple times, proving it has strength. And you saw that strength yet again today. Even I thought it was going to backtest. I was like, oh yeah, it's probably going to backtest about, 395. Oh no. No, it's not. Okay? Now, I'm going to show you momentarily the daily and the weekly charts of the MACD for the .com 2000 crash, 2008 GFC, global financial crisis, and 2022. And you are going to see examples of both these hidden lines, but more importantly, how the MACD proves we have bottomed. The October 13th low, October 13th, 2022 low, is the bottom. And we call that on this channel the Hive. You're going to see evidence of this, that the Hive was first constructed in 2018, 2019, still under construction in 2020, and it was completed in 2022 on October 13th. Okay, so having said that, let's get into it. What you're looking at right now is 2008 daily chart. Now, I'm going to go ahead and leave this YouTuber anonymous, but it was just brought to my attention that this YouTuber was saying, we are in the exact same pattern formation as 2008, summer, that led to a bear flag and then a plunge. He is calling for this plunge. Is he right? He has made there is a critical flaw in that assumption. You guys who follow my channel, you guys know I never follow price action. I never mention it. I never talk about rising wedges, falling wedges. You know, I don't talk about bear flags. I only talk about EMA, SMA, MACD, and RSI, don't I? You guys know that. There is a critical flaw in this comparison that this YouTuber is trying to do, is trying to make. Look at A, B, C. Look at A, B, C on the MACD. Got it? The purple line is the bear line for S&P 500. The negative 20 on the daily chart right here. The negative 29 line is the bear line. You cross that line, you're going lower. Okay? And here's the low, March 2009. We all know that already. Now, this is 2008. Let's now show you 2000. Let me zoom out a little bit. 2022, 2023. Same negative 29 bear line. He's saying A, B, and C is going to happen. Let's go back up. A, B, bear flag. C, plunge. A, B, C, MACD. You tell me, does that MACD look the same to you? A, B, both are above 0. C is above the negative 29 bear line and going up. Does that look the same to you? I don't think so. Just look at that for a second. Okay? The key element, the negative 29 bear line. A and B and C are above it. A and B are above the 0 line, and C has now crossed it. And C finishes above the negative 29 bear line. A, B is below the 0 line. C is below the 0 line. We're not going lower. And you're going to see more conclusive evidence of this beyond just this chart that I'm showing you. In fact, see, this is why I don't talk about price action. Just because this formation in 2008, bear flag, looks similar to this bear flag, you're making a critical comparison mistake. This is a bear flag not because it's a bear flag formation. This is a bear flag because the MACD failed to cross the 0 line. It stayed there and then went back down. And also because the EMA 50 is not reclaimed right here. So for two reasons, the MACD is below the 0 line and the EMA 50 is not reclaimed. And you guys, you existing listeners, you know, I say the EMA 50 is the MACD 0 line. Okay? That's not a bear flag. Now, you go up here. Here's your starting point. Start, end. Right? Starting and ending. That's going to represent start and end. Let's zoom out. Start and end above the negative 29 bear line. It ended above, and now point C is starting. There is no comparison. This is not a bear flag. In fact, it's a cup and handle. You know, actually, I just told you, I might sound like a hypocrite. I just, man, I don't talk about price patterns. But in this case, I will. Upward cup. Oops. Yeah. It's a cup and handle formation, guys. Not a bear flag. There is no comparison. You guys know who follow me on Twitter. You know I talk about the MACD all day, every day. It is essential. It is a core part of my trading, intraday, entry, and exit strategy. I rely on it 100%. It never lies. Right? I mean, you guys know that. You follow me on Twitter. I also talk about all the time EMA, SMA, EMA, SMA, EMA, SMA across different time frames. Yes, I talk about that too. But I always talk about the MACD, hands down, full stop. It never lies. And it is not lying here either. Okay? So, this is a completely false comparison. There is no comparison at all because the MACD formation is not the same at all. At all. A, B, C. Not the same. That bear flag completed with a lower low. See that? That's clear. That is undisputed. Lower low. Lower low. Does that look like a lower? Does that look like a lower low to you? I don't think so. I don't think so. False comparison. False comparison. Let's go to .com for SPY. This right here is the low. Ah, wait. Before we do that. Oh, yeah, yes. Let me zoom on out because this is a macro review anyways. Lower, 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 low. The low. Higher, low, higher, low, higher, low, higher, low. Lower, low, lower, low, lower, low. The low. Higher, low, higher, low, higher, low. Above the bear line. Now, do you want to see .com? Lower, low, lower, low, lower, low. Higher, low, higher, low, higher, low. Above the bear line. That's the low. That's the higher low. That's the low. That's the higher low. We're making higher lows above the bear line. What do you think now? I circled this point specifically as I drew this as the bear line because I chose this point because all of this was still in an uptrend. That's how I know to draw the bear line. I said, okay, I'm going to circle this point right here. Look where we are, point C now. Still in an uptrend. Downtrend area. Uptrend. The MACD never lies. You guys know, even last week, when I warned you guys in pre-markets, I said, that's a head fake. Twice last week, I said, that's another head fake. I relied on the MACD to do it. And the RSI. And the RSI. But I relied on the MACD also. Okay? Lower, 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 low. Higher lows, higher lows, higher lows. Above the bear line. Continue as you were. That's where we are. We are now continuing as you were. But you don't have to believe me just yet. Let's go to the weekly. The weekly. Yes. Let's start with 2008, like we did the first time on the daily. And as you know, you guys know, I've called it the Hive for 2022. 2008, it is fitting because it is the global financial crisis. It is the vault. The low is the vault. And guess what? You guys know I like drawing best fit lines. I'm not going to call them trend lines. They're best fit lines. You guys know they started constructing the vault against you and I as of August 2007. A year later, Lehman Brothers files for bankruptcy. They were already getting ready a year in advance to construct the vault. Here is the line, the hidden line that nobody sees. Let's see how those lines connect. Oh, that's not too shabby. That's not too shabby. That's not too shabby. That's not too shabby. That's not too shabby either. These are the same hidden lines I started the episode with. For example, SMA 20, EMA 50, weekly expected moves, channel tops, channel bottoms, the Hive, channel bottom. All of these are hidden lines market makers don't want you to see. They instead want you to see the traditional trend line, like, oh, I can connect this with this with this. Oh, yeah, there you go. They want you to look over here. They want to play that shell game with you. They want you to be like, oh, look over here, look over here, look over here. No, I want to look inside here. I want to look inside here. I want to see what's going on, what y'all doing over here. I used to play this game with my son. Hey, look over here, look over here. Okay? And what happened, as we all know, 2009, March 2009, the birth of QE, the father, Ben Bernanke. We all know what happened there. Boom. Okay? They were already starting as of August 2007, is my point. But to further that point, look at this. Down, down, down. Here's the bear line. On the weekly, it's -7, by the way. On the weekly. Down, down, down. Up, up, up. Okay? Just keep that in mind. Here's a little notch. Here's a little notch right there. Higher or low notch. That coincides perfectly with the low of March 2009. You guys have heard me in previous episodes. I talk about the notch on the MACD. The MACD never, ever lies. Let's go down here and look at 2022. Ho, 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 ho. I think we have a similar notch, don't we? That lines perfectly with the low. Zoom out a little bit. Right? Low, 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 below the bear line. Notch, up, and away. Here's January of this year. Low, 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 notch, up, and away. I chose this bear line because, you know, I was like, okay, well, you're still going up here, right? You're still going up. Up, up. I said, okay, we're going to pick this line. Okay. 2019, 2020. Look at this wick low. Wick. Wick, wick, wick. Body. 2022. Wick low. It is complete. It is complete. The COVID low down here was an aberration. Just like all of this up there. All of this in 2020, as of 2020 to 2021, is an aberration. Because if you cut this out, we have a continuation, don't we? Right here. Cut all this out. And look what we have right here. It's a continuation, guys. The bottom is in. It's in. Higher, low, up we go. Higher, low, up we go. One final thing, let's look at the .com. I call that the net, the internet. Because how can we forget in 2000, you've got mail. Okay? Now, here was the low. Let's compare that. So, up and then down, down, down. Higher, low, up we go. Down, down, still making higher lows, double bottom. Ah, higher, low, up we go. You did make higher lows. You made higher lows. And if you really want to know, some 23 years later, here's the trend line that they already constructed. They knew exactly what they were doing to disentangle the .com bubble. They knew exactly what they were doing. The net. Higher, low, up we go. So, here we go. Just going to show you one more thing. So, oh, excuse me. That is not quite it. Today you were able to see the vault and the net from 2008 and 2000 .com bubble. You were also able to see the Hive that you existing viewers have always talked about. Well, guess what? Because I believe we are in the start of a new uptrend, I am now going to transition away from the Hive because we are in a different trend now. And I've created a new name for it. And it is befitting and still keeping to the Hive's theme. And that is the drone. What is the purpose of the drone? Shall we say it is to advance the Hive's interests, to take it further, to advance the interests of the Queen at the Hive. So now we have the drone. So I just have one final question for the bears. As the springtime comes and goes, and if we're still making higher lows, what say you then? Please feel free to follow me on Twitter, where I'm giving real-time tweets during intraday trading. Always listen to your favorite music. It's going to help you get into the zone, in the right state of mind. And with that, please give this a like, share, subscribe, or click to be notified when I release something new. I am Agent 000, signing off.